I'm curious what made you click on this video. It's quite possible that for some of you, the comments on the thumbnail made you click on this video. Maybe you clicked on this video because you're a fan of Stackers University, me, Dr. Stacker, and or the quality of the content I try to deliver. Regardless, you are here. I appreciate your time, and I hope to honor your time. What you saw in the thumbnail were actual comments I received the other day. As a result, I spent several hours thinking about whether I should respond, how should I respond, and more importantly, why I felt the need to even give this energy. To her credit, Mrs. Stacker tried to talk me down and have me ignore the behavior of this troll. Well, clearly she wasn't successful. While I will address the comments at the end, I'd rather we spend our time right now focusing on some important investment lessons related to these comments that actually affects 100% of us. So if you can, please watch the entire video. Putting aside the inflammatory comments and the nature of those comments, a major part of what shapes my investing philosophy and what I cover on this channel is the theory of behavioral finance. I've covered this in previous videos, so I'll give you a brief recap. I love behavioral finance because it uses psychology and economics to explain how we make financial decisions. This is critical because if you're investing for any period of time, you know that our emotions and emotionality play a huge role in investing and markets. Most theories of finance look at markets as being logical, but we all know that people are not logical or rational all the time, especially when it comes to how people invest, spend their money, and even save their money. This is why a large majority of investors make irrational financial decisions like overreacting to news, FOMOing into investments, or holding investments for too long or even not long enough. To me, behavioral finance helps me make more intelligent and rational decisions. There are several key principles to behavioral finance that we all need to be aware of, and I'm listing them here on the screen, so please take a screenshot because I just can't cover all of them right now. In particular, I want to focus on several cognitive biases that can influence our decision making, especially as it relates to errors in judgment, how you perceive risk, value, and opportunities. These biases arise from the way our brains process information, and of all the biases, there are four that are crucial and critical to avoid, especially for us in the stacking community. Let's start with confirmation bias, which is our desire to seek information and consume information that conforms to our pre-existing beliefs, which causes us to ignore any contradictory evidence or evidence that challenges what we think or believe. I witness this almost every time I share information that is not bullish for silver on this channel. The best example are the recent videos I did challenging the prevailing belief that there is a silver shortage. It was amazing to see how people just flat out disagreed and told me I was wrong, regardless of the data I shared and industry experts that confirmed the information. I even had people say, well, you can't trust the Silver Institute's data when the biggest argument for a silver shortage has been the use of the Silver Institute's data. Make that make sense to me. Almost going hand in glove with confirmation bias is anchoring bias. Why? Because anchoring bias is all about how we rely too heavily on the first piece of information we receive or use when making a decision. The best example of this is the role of constitutional, aka junk silver. Many of us were drawn into the stacking world because of our fears about the future of the dollar, but somewhere along the way, that narrative became you need junk silver because that's what we're all going to use when the system collapses. I have a challenge for you. I want you to go out and find 10 random people and ask them, when did our coinage stop containing silver? Ask them how much silver is in a mercury dime. If only 1/2 of 1% of our population owns metals, what makes you believe that in a moment of chaos, the masses are going to start to recognize and accept junk silver as a payment? Come on, man. You buy junk silver because it isn't being made anymore and because it's typically an inexpensive way to buy silver. Unfortunately, regardless of the logical arguments, so many people still anchor to this belief. More often than not, people anchor to their beliefs because of the next bias, which is the recency or availability bias, which is the tendency to judge the likelihood of an event based on how easily examples come to mind. For example, every time I discuss the idea of vaulting or storage deposits, one of the first things I hear about is the 2022 incident in Beverly Hills. First, I know someone that had a safe deposit box there, and all of his metals were eventually returned. Second, you're talking about an incident that occurred less than 1% of the time. Statistically, it is more likely that someone will break in your home than your safe deposit box being confiscated. I'd rather you object to the idea because you are not comfortable with your metals being out of your reach. It's simply bad logic to use this literal exception to the rule to justify a decision because you're simply falling victim to availability or recency bias. Next, let's discuss the endowment effect, which, let's be honest, no group falls victim to this like the silver bugs. This effect is our tendency to overvalue something simply because we own it. How often do we hear these insane evaluations for silver, especially from those that are closest to the market, like the pundits and YouTubers, etc.? And YouTubers in particular are quick to tell you all the uses of silver and all the ridiculous reasons why silver should be worth so much more. They will blindly use that rationale to argue values like $500 an ounce with just shaky justification. My favorite is when they parrot Keith Neumeyer's and Andy Scheckman's argument that the ratio of silver in the Earth's crust is how silver should be priced, and why the GSR should be 11-1. Let me say this again. Scarcity alone does not dictate price. Utility is a major driver of price. Isn't it interesting that they don't make this argument with other metals like platinum, palladium, or even rhodium? Platinum is roughly 1.25 times more abundant than gold in the Earth's crust. However, we only mine about 6% of it. So should platinum be less expensive than gold, or should it be 94% higher than gold? The endowment effect is all about overvaluing what you have in your hand. And as my surrogate dad used to say whenever we played this card game called Bid Whisk, he would say, quote, "Never trust a man who falls in love with his own hand." Double entendre intended. Simply put, don't fall for the trap of overinflating the value of something simply because you're invested in it. It's okay to be bullish with good reason, but don't fall in love with it because you own it. No matter how much I love gold and silver, there will be times where I won't be as overweight as I am now, and selling will be advantageous because there will be better opportunities. I will be agnostic and shift my position because I'm not going to have the endowment effect. I hope you will do that as well. As I shared in my previous video, I don't care what you think as much as I care that you think, that you learn how to take in information and learn how to make informed decisions for yourself, because you as the investor have to own your own results. Understanding behavioral finance is crucial because it equips you with the skills to understand the psychological factors and the cognitive biases that influence most investors, which impacts their decision making and often leads to irrational behavior. This is why over and over again, people buy high, sell low, or FOMO into investments. You're understanding that people and the herd are not logical, that they don't make well-informed decisions, and as a result, their wealth suffers can pay huge dividends for you as an investor. When you master these concepts, you will find that you will manage your emotions better, especially in times of turmoil or volatility. You will also avoid the common investor mistakes and make better decisions. You will use the gap between how people should behave in markets and how they actually do to your benefit. Now, let's spend a few moments talking about the comments I put on the thumbnail made by Super Soup Rod Cheetah, or can I just call you Brantley since that's your government name anyway? Sadly, you aren't the first person to make comments like this on my channel. Typically, I just ignore them and remove the comments, but I'm not sure being silent always helps. It's this exact mentality that makes it harder for me and people of color to be evaluated based on the quality of who we are and the work we do, and not our skin color. I realize that you're just a symptom of a bigger issue or disease, and we can't cure this if we don't bring these things to light and treat the disease. The fact that your racial and cognitive biases will serve as the basis for evaluating the quality of my content actually doesn't bode well for you as an investor. I highlight your behavior because it's important for others to see how such a narrow, small-minded perspective can hinder not only your investments, but every single facet of your life. Fortunately, your sentiments, and your small-mindedness do not represent what the rest of us believe, subscribe to, or follow. Now, for the rest of us to have a full allotment of 46 chromosomes, let Brantley be an example of how cognitive biases can get in the way of your success as an investor. If you desire to be a successful investor, you need and should seek out good, accurate, and helpful information. That means you may not always agree with the information, or it may challenge some of your core beliefs. I want you to learn not to blindly accept information simply because you agree with it or because it fits your narrative, but because of the logic or the truth behind it, regardless of the individual or the color of the hands delivering the information. Today in the comments, I have one question and a big favor to ask. First, the question: which of the four biases, confirmation, anchoring, recency, or endowment, do you have to fight against the most? And now for my request. As a sign of support and solidarity, could you please simply put an A plus in the comments and let everyone know that we do not support this kind of behavior, and going forward, this kind of behavior is not acceptable. Always stack smarter and never stop learning.